I'm Diane Rosagnola, here in San Francisco at NAREIT's REIT World, our 2018 annual conference. I'm here today with Jackson Hsieh, President and CEO of Spirit Realty Capital. Welcome.
Thank you. How are you?
Earlier this year, Spirit Realty completed a spinoff of SMTA REIT. How has that transaction impacted the company, and how does it fit into your broader strategy?
Thank you. Well, the spinoff occurred on June 1st of this year. And to be honest with you, it was a game changer for Spirit because not only did it leave Spirit with a really low leverage balance sheet because we were able to raise a lot of debt, on the SpinCo prior to launching it to our investors, but we were able to remove a couple of major impediments that would have continued to be kind of derailers for Spirit. Namely, we had a large concentration of Shopko stores and a very large master funding trust facility that was secured debt. So we were able to move those two things off, and as a result, we ended up with about 2/3 of the assets and half the debt. And now we're in a great position right now.
So what do you anticipate in terms of investment opportunities heading into 2019?
Well, look, we have a heat map, and we've talked a lot about it in our public disclosure. And basically, we're looking for industries that have a combination of two characteristics from an industry standpoint. One being technologically or Amazon resistant, number one. And the second axis that we look at is Porter's 5 forces, which is really looking at competition, barrier to entry within particular industries. So industries like car washes, home improvement, building materials, education, are areas that we focus on, we think that have some resistance to some of the technological challenges that are out there. Of course, in the end, it's all about credit. It's all about real estate location and scoring. And, finally, just what the rent is relative to replacement. That's important for us.
What are some of the main changes you've seen in Spirit's tenant base, and how do you expect that to evolve?
Well, the spinoff resulted in us having about 50% of our rent comes from public reporting tenants at Spirit. Before the spinoff, it was about 30%. So just by virtue of moving assets out, we had a higher proportion of public reporting tenants, which we think is a good thing because public reporting tenants tend to have a lot more disclosure and transparency. They're probably a little bit more sophisticated and have better costs of capital and access to liquidity. The second thing is about 42% of our tenants are investment grade equivalent or investment grade, and that's also an increase as part of this ability to move assets off. And I'm happy to say, since the board made the management change, I think the total shareholder returns between Spirit and SMTA and the dividends has been about 35%. So the plan's working, we're moving forward, and we're really excited to be a part to manage both companies.
Thanks so much for being with us today.
Okay, thank you.
For more from REIT World 2018, visit REIT.com.